Hello and welcome to the Personal Finance Savant Google Sheets program. In this video, we're going to focus specifically on the calculators that are built into the tool. So if this is your first time hearing about this program and you want to hear about the full overview, I'll put a link in the description below to give you a better idea of what the program is as a whole. But this is really intended to be a full tutorial of how to use the calculators that are built into this tool. So with that, we'll jump right into it. The first one that is built into the tool is the federal tax calculator. So in here, if you're trying to understand how much taxes am I going to owe based on how much money I expect to make, this is the tool you should go to for that type of analysis. And it's really quite simple. There's two pieces of data that you need to enter in. The rest of it's going to be automatically calculated for you. So let's say you expect to make $75,000 next year. You'll notice all the values are automatically updating. You also need to put in what your filing status is going to be. For the tax filing statuses, the options are whether you're single, you could be married filing separately, you could be married filing jointly, or you could be head of household. Head of household typically just means you're a single parent, or you're just maybe not a single parent, but you're taking care of a legal tax dependent in your household and you're unmarried. But then it's going to calculate out what's your total federal income taxes that will be due. In this case, about nearly $12,000. How much you're going to pay to Social Security tax. And this is basically money that's going for your future retirement, things like disability, unemployment insurance. Those types of things would go out into this money if you were to need that in the future. And then you have things like the Medicare tax, future Medicare needs for those retired and unable to afford their own medical insurance. And then it'll sum all those up to give you your total federal taxes due, and then an effective federal tax rate, which is just your total number of taxes, $17,545, divided by your total income, $75,000. The next one I want to take a look at here is your net worth calculator. And this is something, all of these tools that you can use anytime throughout the year, throughout your life. You're trying to make a financial decision or you're trying to understand where you're at financially. You can use any of these tools at any point in time. It's not a one-time use or anything like that. In here, what you're going to do is enter in all of your different assets that you own. So your home, your car, your 401k if you have it. A full list of things that you could potentially have are in here. But you can always enter in ones that aren't included in the list if you have something else. But just to add one more, we'll say you have $10,000 in cash on hand as well. And you'll notice these are all going to update automatically when you do that. And then on the right-hand side of the page, you're going to enter in your total liabilities. So you have a home, you likely have a mortgage on that home. So what's your mortgage that's actually due on that total home value? You have a vehicle. Do you have an auto loan outstanding on that vehicle? Your 401k, on the other side, do you have a student loan that you took out in order to get a career, to start putting money in that 401k? Do you have, for example, any credit cards with a balance on them? Those are the types of things you're going to want to enter here. And then your net worth is simply your total assets, summed up here, minus your total liabilities, summed up here. And in this case, this individual's net worth would be $67,000. And the next tool is the retirement tool. This one is potentially the most powerful one that's in here and that I look at annually myself. The whole point is to understand where you're at today, what you're going to be contributing to your retirement throughout your career, what are some assumptions that you're going to make, and it's going to automatically calculate all these different items over here. And we'll go through this step by step right now. So the first thing you're going to do is enter in your initial inputs. And these are things that you know because it's your current state of affairs and your current plan. So what's your current age today? What age do you plan to retire? How long do you plan to live until? What's your current salary? What's your current retirement value? So do you have money that's a Roth retirement contribution, which this just means the money was taxed before it went into the account? But then all the earnings that are grown on that balance throughout your career, as long as you pull it out after you're 59 and a half, all those earnings and everything, your principal, is all pulled out tax-free. Do you have any traditional contributions? These go in pre-tax, so you get a tax break when they go in, but then when they come out, they're taxed as ordinary income. Do you have any taxable retirement investments? So this is just like a typical brokerage account you might have with TD Ameritrade or Schwab or whoever it may be, where the money's outside of a tax-advantaged account. That's just considered a taxable account. And do you expect to get any type of inheritance at some point before you retire? And then we look at the annual contributions, and these are defined by you. This is your plan. What are you planning to do for the rest of your career? Are you planning to put in 6% to your Roth contributions, 3% to your traditional? Do you plan to contribute to your taxable account as well? And you can either do that on a percentage basis, or if you know, hey, I'm going to put in this exact dollar amount, you can do that instead, or you can do both. So I'm going to put in 3% of every dollar I make, plus I'm going to add an extra $3,000 as well each year. And then you put your future assumptions. So these are unknowns. Take your best guess. I put some reasonable guesses already in here, but you can tweak these as well. So how much do you think you're going to earn more each year through compensation or merit raises at your company or promotions at your company? If you think it's going to average more like 5%, go ahead and put that in here, and all these numbers are going to update. What do you expect your annual investment rate of return to be? Here I put 7%. Based on historical stock market returns, somewhere in that 8% range is 7-8% range is pretty reasonable. So I try to keep it conservative. Don't overinflate this and say, hey, it's going to be 15%. Your numbers will be way off. And when you get to retirement, you'll be, unfortunately, disappointed. What do you expect the annual rate of inflation to be? And this is incredibly important as well, because when you look back over time, inflation typically has been in that 2.5% range. And what that means is every year, the goods that you're buying, the fuel you're putting in your car, the groceries you're buying, your home and shelter costs, that entire bucket of goods has gone up about 2.5% per year. So what that means is if you had $100,000 in the bank today, next year at the same time, you would actually have only about $97,000, $98,000 worth of purchasing power. So that same $100,000 is not going to be able to buy you the same basket of goods today as it will, say, 20 years in the future. And it could be significantly different. So this factors that into your retirement outlook. And then what do you expect your effective tax rate to be during retirement? And this is going to depend on what the government does. It's going to depend on how much you plan on pulling out per year. But as a general rule of thumb, your tax rate tends to be lower in retirement because you're earning less money in retirement than you did throughout your working life. And then on the right-hand side, all of these items here are going to be automatically calculated for you. So you just completed all the user inputs. Now this is going to tell you what your total salary will be throughout your entire career. So this individual making $50,000 may not sound like that much, but if they're getting 5% raises each year and they're working from 30 until they're 65, they're actually going to make nearly $5 million worth of income. And on the retirement contributions, if they already have this money contributed and they follow these rules down here, they will have contributed about $750,000 to their retirement. But then you look at what their retirement value is actually worth with all the investment growth and compound interest throughout the years. They actually have closer, if I quickly add these up, closer to $3 million, 2 3/4 or so. And it'll break it down between those different contributions. And again, this is important because the Roth will not be taxed at retirement. The taxable will not be taxed, but the traditional income will actually be taxed. And then assuming you pull your money out evenly amongst those 3 different buckets in there, it's going to tell you how much you should expect annually to pull out of each of these different buckets. So if you follow this plan here and pull out your money as though every year you're going to pull out the right amount so that when you hit your expected age of living, if 85, that you'll end up with $0 in the bank. That's kind of what this is intended for right here. But then it'll total that up for you. So a total of nearly $250,000. But you got to keep in mind your purchasing power as well. So this is factoring in inflation. So you have $250,000 per year of income, but factor in inflation, your first year of retirement is actually going to be more like $102,000 per year in today's dollars. And then your last year of retirement is going to be more like $60,000. So something important to plan for. Don't look at the raw dollar value. Look at the purchasing power. That's what is going to ultimately matter. The next one here is the debt repayment. So you're thinking about pulling money out from a loan for some purpose, and you want to know how much can I afford to borrow, or you already have a debt and you're going to put X number of dollars toward it. You want to know how quickly can I pay off my debt if I put this much amount of money towards it. So here you're able to put in what the payment period is. 90% of the time this is going to be monthly, but you can also select other options of are you making quarterly payments, weekly, daily, annual, but we'll leave it at monthly for this example. And let's say you have these, for example, could be your student loans. You have $50,000 of student loans at an annual rate of 6%, and you're expecting to pay $1,000 per month. This down here is going to automatically tell you it's going to take you 58 payments to pay off that $50,000. This is when you can expect to pay it off. This is how much you're going to pay total on that $50,000, and then it's going to subtract out. Here's how much you paid in interest on that $50,000. And just to play with some of the numbers here, let's say for me, I would be like, all right, I want to pay this off within, call it 50 months. How much would I need to pay per month to pay it off in 50 months? And just play around with these numbers here. So if I pay $1,200, I'll pay it off ahead of my goal. If I pay it off $1,150, I'll be pretty much at my goal of about 50 payments. So you can toggle those however you like, and it will give you your outputs automatically. Now, the other important question is you haven't borrowed money yet. You want to know how much you can afford to borrow. And a great example here is you're going to take out a mortgage, and you want to know how much mortgage can I actually afford. So let's say you can afford let's just say your interest rate you're expecting on your loan, which is pretty close to where we're at in January 2023, is about 6.5% on that loan, and you want to be able to afford $2,000. That's what you can afford. And the number of payments typically on a mortgage is 30 years or 360 months. If you want to do a 15-year mortgage, you could cut that in half. But then this down here is going to tell you what you could afford from a debt principal. So this is saying you could afford a loan of $316,000. And if you actually took out that loan, your payoff date would be in 2053, which is 30 years from today. And then how much you're total going to pay. So this is the total cost of your loan that not a lot of people take into account. They're just seeing the monthly payment. They're seeing the loan balance slowly go down. But over this loan, you're actually going to pay over double what you actually borrowed. You borrowed $316,000. You paid back that plus an extra $403,000 in interest. So two great tools right there if you have any debt or you plan on taking out any debt. So subscription tracker here is pretty easy, but a lot of people just don't know where their money is going every month. They have Hulu, they have Netflix, they have Apple TV, they have a gym membership that they never use. Whatever it is, you should keep track of all your subscriptions in here, how often or how many payments per year you're making on those, how much that payment amount is. And this is going to let you know what your total subscription amount is each or throughout the year. So you can play around with this. Hey, what if I cancel? Maybe I don't use Spotify. I'm going to get rid of that one. Maybe Hulu, instead of using their higher tier of $9, I'm going to use the cheaper one that's only $5. You can just play around in here, and then also use this as a way to understand what are all your active subscriptions that you're paying for. Pretty simple tool there. And then this last one, the Savant Scorecard. This is really my trademarked analysis of giving someone a grade based on where they're at today with their financial picture. And it really factors in five different financial metrics that I think are really critical. The first of which is your income percentile. So this is for your age and how much money you're making. This is the percent of people within your peer group that you're making more money than. So this would say this individual is making more money than 80% of their peers. And there's a very useful link right here that'll help you calculate that for yourself. And if I just click on that quickly, if you, let's say, for example, you're 35 years old, your income is $75,000 a year, you hit calculate, And this tells you that your percentile is 67th percentile. So you're making more money than 67% of other 35-year-olds in the United States specifically. So you go in here, you say 67%. You look at your net worth percentile. So this is the same type of idea as the income percentile, except it's looking at your entire net worth. And we kind of covered earlier how to calculate that with the other tool. And then if you go to this link, you can do the same type of quick calculation. So let's say your net worth is $200,000. You're in that 35 to 39 bucket. We're going to count your equity in your primary home in your net worth calculation and just hit calculate. And then that'll tell you where you fit. And then you can kind of see on this curve as well, well, what if my net worth was, say, 300,000? What percentile would I be in? Or what if it was closer to 483,000? What would I be in? But just take that number and go ahead and plop that in here as well. So 71. And then what's your savings and investing rate? This might be difficult if you don't know it yet, but what do you expect it to be for this year? Or once you use this program for a year, just go back and grab your numbers. It's already going to be in one of the dashboards for you, and just type that in here. But let's say it's 22%. And then you enter in your credit score. You can grab that easily from Credit Karma. If you have a credit card, nearly all of them will give this to you for free as well. But let's say you have a credit score, your credit's great. Let's say you have a credit score of 800, and you'll see that these are automatically updating your grade in each one of these different categories as well. And then what's your effective tax rate? Again, this is just like the savings investing rate. After you do this program for a year, you'll be able to have that information readily available. But for now, just take a guess. We'll say this individual's is 25%. And that's going to take your sum total of this score, and it'll give you your Savant score. So this is something you can use if you have others using this program to compare yourself with them or to compare yourself against yourself. So maybe when you start in 2023, you're a C+, but then you're making goals in this program, in this spreadsheet, trying to improve all these different categories, thinking of ways to earn more money, ways to save more money and improve your net worth, ways to increase your credit score. But the goal really here is to get as high as you can on this scoreboard and really compete against yourself is the primary intention. But thank you for watching. The next video I'll have linked above will take you to the next section, which will cover the data entry. And then in a future video, we'll cover the two analytics tools as well. But if you're interested in purchasing or watching just right out the full overview video, you can check the link below and that'll be there. But if you got value from this video, if you like the tools that I'm making, please go ahead and hit the like button. Please, would much appreciate if you hit that subscribe bell. And if you know anyone else that you think would get value from this tool, being a part of this program, please go ahead and share it to them. I would greatly appreciate that as well, and I'm sure they would appreciate it also. All right, thank you for watching, and if you have any questions, please feel free to reach out in the comments below. Thank you.